Uh, Good morning, everybody.
Morning.
Nice to say hello from Vilnius again. And today in the Orion Securities office, we have Mykolas Navickas, representative of Vanagas Asset Management Group,
Hello.
which is one of the biggest real estate developers here in Lithuania. I guess it's fair to say that focusing on residential real estate project development, according to the data of number of flats and real estate units sold, it's a top three developer in Vilnius and Kaunas region, and still growing. So it's really a pleasure for us as a market intermediary to see that such strong real estate developers with really a good brand name here in Lithuania are choosing capital markets to raise additional money to finance growth and further development of the whole group.
Mhm.
And in today's presentation, we want to talk about a bond issue, which is issued under the program of up to 8 million euros. So, meaning that in 12-month time, the company can offer up to 8 million euros of the bond. However, now we are starting with a first smaller tranche, which is set to 3 million euros with option for the issuer to increase the initial size up to six. And the maturity is 2.5 years. So given what we see in the market, it's, I would say, rather in the middle. We see maturity is mostly up to 3 years. So this is almost three, a bit shorter maturity. And offering investors yield ranging from 8 to 9%. A bit comment regarding the interest rate. So in this issue, we chose to make an auction. So investors, when subscribing for the bonds, when submitting an order, can choose what yield they want to invest. So 8, 8.5, and 9. And afterwards, after evaluating demand, uh, we will decide what should be the yield. And if investors are submitting at 8% and yield finalizes, for example, at 8.5, it doesn't mean that these investors will receive 8. It means that they will also receive 8.5. So the single interest rate, which will be set for all orders, will be decided. Of course, if order, for example, will be 8 and the final interest rate will be 8, so order submitted at 9% would be canceled and not fulfilled. So also one technical comment during the whole presentation, please submit your questions to the Q&A form, which we have here on the Zoom interface. And at the end of presentation, we will cover all these questions. So coming back to the issue, I would say one of the most important things in this case is the collateral. So this issue is secured by the pledge of shares in the investment companies owned by the group. So Mykolas will expand a bit more on this, but the company structure its investments in real estate under the investment vehicles, funds. So it's closed-end funds, which are managed by a separate fund management company, and the issuer is holding equity position, so owning fund units in these funds, and this issue is secured by a pledge of the specific fund units behind which we have specific real estate projects, which we'll also talk about. And the covenant states that during the validity of the bonds, the market value of these shares should be at least 2 times the bond value. And if for some reason it fluctuates, the company is obliged to pledge additional fund units from the reserve list of these investment companies. Also, Company's receivables from the shareholder company are pledged just in order to make sure that all the value stays within the group and that actually bonds are redeemed first and afterwards these only afterwards could the cash flow leave the group structure. A bit financial summary. So, as mentioned, the company acts as a holding company, consolidating investments in real estate projects. Um, as a result, as a result, and as a result of the fact that a significant part of these subsidiaries are structured as funds, when evaluating the financial income, we should look at the bottom line, so net profit, because when consolidating only part of these subsidiaries' sales revenues, so real estate sales revenues are recorded at their sales, consolidated sales. Majority of income comes from the financial activities line. So as you see, 9 million euros recorded in 2024. Under this line, we have both revaluation of real estate project as well as sales and corresponding dividends, which are channeled towards the issuer from these subsidiaries. Of course, when looking at the financials, what we stress out and point out is the equity position. As you see, the overall assets of the group, consolidated assets, are around 36 million euros, out of which 31 million euros is actually equity. So we have equity ratio of more than 87%, indicating quite strong capitalization by the group. Additional comment, which we had during Lithuanian presentation, is that if we consolidated all the debt from the subsidiary funds, which are recorded under equity accounting principle, we'll still have an LTV of 0.7 around. So still significant, really significant equity position. Before giving word to Mykolas, final term sheet update, not update, but review of the term sheet. What I have already mentioned, the issue size of first tranche is 3 million euros. We have a placement going on till 16th of April, so next Wednesday. Issue date is set at 18th of April, which technically, due to the fact that in the markets it's a big Friday, actually investors will see the bonds in their accounts only after Easter, and so on Tuesday. But anyways, it doesn't change the fact that interest payment dates and redemption dates are going to be on the 18th of April and 18th of October. One additional comment regarding the covenants. So besides what I have mentioned, that the value of the pledge should be kept at least twice the value of the issued bonds. Also, we have an adjusted capital ratio covenant. How it is adjusted? So we subtract the company's loans provided to the shareholder from the balance sheet as well as from the equity. And we state that this adjusted equity ratio cannot fall below 30%. Again, focusing on the fact that company should maintain a significant capitalization of the group till the maturity of the bonds. Maturity 2.5 years, but as quite common in recent issues, the issuer has a option to redeem early. So if the redemption is done after 12 months, which is the closest possible early redemption date, 1% premium is paid. If it is done after 2 years, so when half year is remaining till the maturity, the early redemption could be executed without paying additional premium. So finally, allocation of the bonds, as I said, auction process regarding the interest rate level will be in place, but afterwards, all the allocation will be based on time priority. So the order submitted earlier will have a priority over order submitted later in the subscription period. So that's introduction from my side, and now I give word to Mykolas, who will talk about collateral use of proceeds of this issue.
Yeah, thank you, Mykantas, for the introduction. Good morning once again, everyone. I will expand on a few key areas that I believe are really important to deep dive apart from what Mykantas mentioned. Firstly, regarding collateral. We, as well as Mykantas mentioned, pledged shares of the group companies. And to be more precise, it's three different investment funds, project companies, and we pledge shares of all these three projects in Vilnius. But before moving to these projects and detailing it, I want to give some more additional context. So firstly, you see that we pledge a whole value of our NAV. So what it is, right? So it stands for net asset value, and essentially it reflects our equity position in these projects or in these funds. And regarding the calculation of this NAV, net asset value, right? So it's calculated by three levels, so-called. So firstly, it is calculated by the accounting company which accounts the fund. Then it is approved by the fund management company, which is Demus Asset Management. And I remind that it's, of course, regulated by the Lithuanian bank. And lastly, of course, it's verified by the when doing annual or semi-annual audits of each of those funds.
Maybe it's also worth pointing out that the market value of real estate is an initial input of evaluation, which is based on independent certified appraisal valuation.
Yeah, thank you for that. Then giving some more details. So Mykantas mentioned in the beginning that we have a covenant which requires us that the net value ratio of pledged shares is no more than 0.5. So meaning that we must pledge at least two times our shares to what we issue the bonds. But what I want to point out that during the first tranche, we offer to you, the investors, a much more favorable ratio. So what I mean by that is if we issue 3 million bonds during the first tranche, meaning that we need to pledge 6 million of funds units, where what I mean by that, we're giving you a much more favorable ratio. You can see from the slide that we're actually pledging almost 15 million euros of our value in those three funds. So the ratio is much higher than is necessary. And we also expect this ratio to keep higher moving forward than two times as well. So this is some general context about the collateral. So moving a bit deep diving to the projects. So I think all of you are aware that it's basically market practice to have one project under one fund. So you can see those names, which is Victory Development 4, which owns a project and develops a project so-called Mooney. Then we have Victory Development 5, which is a project Kaip Niujorke, which would translate to English like in New York City. And the last one is Demus Development 6. It's also in Vilnius, quite a central location in Pumpėnų Street. And it's a bit more forward-looking project, which we plan to start construction in the second half of this year. But regarding Mooney and Kaip Niujorke, basically, It's very similar situation about those two projects. So Mūnai is located in Žirmūnai district here in Vilnius. To give you some context, I would say it's like 3 to 4 maybe kilometers from the Vilnius city center. So it's really, we believe, a prime location. Žirmūnai is currently having, let's say, ongoing conversion. A lot of old warehouses were present in this district, and now it's being converted little by little to this residential area. And Mūnai, I would say, is one of the highlights of the whole Žirmūnai district, as we are constructing a major project which will have almost 500 apartments, and it will be done in at least 5 different phases. So what's the current situation, right? So we started in last year the construction of phase one, and of course sales of the residential units. And since it was going better than our initial business forecasts, we started phase two earlier, both sales and constructions. So it continues to go better than expected. So we're really proud of that. So that's about our largest project, Mūnai. But if to continue quickly about the second project, Cape New York, so it's also in Žirmūnai district, quite nearby the aforementioned Mūnai project. And there are 2 phases there. First phase is basically nearing its end. Almost all units are sold, construction almost finished. So we already started second phase, both construction and sales, and it's going, we also believe, quite well according to our initial forecasts. So this is briefly about the collateral. So if we continue to the source of redemption. So we plan to redeem the bonds by mainly using the funds received as dividends from these 4 projects, which you see on the screen. So Cape New York and Mūnai already discussed. I will not go into too many details once again, but just to summarize, as mentioned in both projects, basically there's phase one, phase two. Phase one almost sold, phase two recently started. So totally those percentages of apartments sold in Cape New York nearing 60, in Mūnai nearing 50. And a large part of planned proceeds are coming from Cape New York. You can see on the screen 5.5 million euros. So we are planning that the second phase of this project will basically come to its end towards the end of this year or beginning of 2026. And we will receive those dividends that are attributable to us. And we will basically use those funds to redeem the bonds in 2027. And also to briefly mention other 2 a little bit smaller projects. So it's Ežero takais, would translate to something like, I don't know.
Lake paths.
Lake paths, since it's quite near the lake, but again, quite central district. I would say like up to 5, 6, maybe 7 kilometers to Vilnius city center. So relatively small, 80 apartments, but the idea here is that we buy a bit, we have a proven track record that we buy a bit smaller units with building permits, and we are able to basically, from the acquisition of the land plot, to build and finish the project, such projects in 15 to 18 months, and pay out dividends to the investors, which are ourselves, of course, as well. So this Ežero takais is, I would say, one of such examples. We started it less than a year ago. You can see that it's almost basically sold out, and we're planning to issue dividends in the third quarter of this year. And similar story with another smaller even project, Senamiesčio Link, would translate towards Old Town, because it's like really nearby the city, uh, old city center, like really just crossing the railway, and that's it. So like 1 or 2 kilometers, maybe less. And a similar story. We're planning basically to finish it towards the end of the year. But here, regarding the source of redemption, I would like to give two more additional important bullet points, which are not in the slide, but I think it's important to mention, is that, as Mykantas previously mentioned, that there are some what we're doing, we're pledging the receivables from the parent company, which is Vanagas Group, which currently amounts to more than 5 million euros. And I will elaborate on the wider group and our wider activities, what we're doing apart from the issue of Vanagas Asset Management. But the main point maybe here is that we also have profitable activities in this, let's say, sister companies. And as a result, we believe that parent company Vanagas Group will be able to repay this debt to the issuer. And last maybe point, which I a little bit touched, is that we're also having, let's say, additional buffer that we think we can use the funds if needed, is by developing newly acquired projects which are currently in due diligence phase. And as I mentioned a few minutes ago, we have a proven track record, but we can buy those smaller projects, basically finalize them and develop them and sell them in 15 to 18 months and redeem the dividends from that. So it's another, let's say, additional possibility of funds.
Mhm.
Yeah. So moving to the use of funds, right? So what is the idea and where we're planning to use it? So basically, I would say that the majority of funds and the main idea is to finance newly acquired projects, but as probably similar to other countries in here in Lithuania as well, those legal due diligences are often quite lengthy process. So to avoid, let's say, not non-working capital, there is an idea that we can temporarily allocate funds to current projects if needed. But still remains the main idea to finance new acquisitions and their development. So we have a little bit information on those currently ongoing due diligences. So there are 7 projects here on the slide you can see. I want to mention firstly maybe 2 of those. Both are in Naujamiestis district, which is like really nearby the city center, also a few kilometers only to the old town. And we have this project in Naujamiestis Panerių Street, you can see. We already acquired one project, another project in Naujamiestis as well. We already made an advance payment. So these 2, let's say, are already acquired. And there's 5 more. So regarding those 5 more, again, you can see Vilnius city districts. So I want to point out once again that we're planning our expansion and new acquisitions in Vilnius, and mainly it is locations, residential areas, I would say, ranging like 2 to 7 kilometers from the city center. So really, our idea is to expand in prime locations and not to go somewhere else further from the city center or other cities. Main target remains Vilnius, and to some smaller extent, maybe Kaunas, our second largest city. And just to finalize on this, it's all residential housing. It's our, let's say, bread and butter. Our track record is there, and we see that the returns are really favorable there. So we're not planning to move to commercial real estate development in the near future.
Yeah, so shortly jumping in with the key date. So as I mentioned, the subscription process is going till the next Wednesday, so April 16th. And when we have an issue date, the 18th of April, coupon is paid semi-annually, and redemption, if not early redemption call option is not exercised by the issuer, The final redemption would be on the autumn, so October and 18 of 2027. Before giving the floor to Mykolas to continue regarding the group history and the main facts, just a short summary of key investment highlights we see. What I have already mentioned is the issuer's size and experience in this residential real estate development, I guess, is one of the key strengths. It is a top three developer. Having a record of being able to simultaneously develop several projects in Vilnius, in Kaunas, and having really a long history of successful residential project development, which is of course related to the second point, is the leadership and management team. Mindaugas Vanagas, UBO of the group, has really a strong experience in real estate development for, I guess, more than 10 years.
Yeah.
Also, the management team is comprised from professional from with different backgrounds from different sectors, focusing, of course, of bringing in the best practices to the group. And all two other points are related to the balance sheet and credibility of issuer. As I mentioned, consolidated equity exceeds 31 million euros, and equity ratio is above 85% at the end of 2024. And of course, the collateral, it's a pledge of fund units, at least twice the size of the issue. And also important to mention what was indicated, that it's on a semi-annual basis being revaluated. On annual basis being revaluated by outside certified real estate appraisers, and based on that, this covenant is checked of 0.5 LTV. If it drops below, the company, the issuer, has to pledge additional shares.
And maybe just to add on this, the funds which we can pledge are detailed in information document, the full list, and worth to mention that basically it's also in quite, I would say, prime locations, mainly in Vilnius.
Yeah, thank you. So yeah, I'm giving back floor to Mykolas.
So thank you for the summarizing. So as Mykantas just said, Mindaugas Vanagas, so well-known, established Lithuanian businessman, is the UBO and then sole shareholder of our Vanagas Group and Vanagas Asset Management, which is the issuer. So a brief history on our wider group. So in 2009, very beginnings of Mindaugas Vanagas businesses, and in 2012, Citus and Citus Construction, which I will detail a bit later on, has been established. And in 2013, first developments of real estate projects in Vilnius has started. Since it was quite successful right from the get-go, it was quickly followed in 2015 by the expansion to Kaunas, our second largest city here in Lithuania. And as group continued to grow, in 2018 we started basically funds structure. We started establishing investment funds, which has led to the creation of a funds management company, Demus Asset Management, which I mentioned is, of course, supervised by the Bank of Lithuania. And as our group continued to grow, we saw a need to a bit clarify, expand, and purify the structure of Vanagas Group. So there was two additional branches or holdings established. So first one being current issuer, which we're talking about in our so-called investment holding, Vanagas Asset Management. And then additionally, we have, we call it internally alternative investment holding, Vanagas Invest. So we can move to let's say, visual structure, how it looks today. We mentioned a bit history, but I think it's important to understand how it looks today, right? So, as mentioned, Mindaugas Vanagas sole shareholder. Then there's this parent company, main holding Vanagas Group at the top, you can see. And then there are three main distinct business branches. So the core branch, of course, once again, is what we're talking about is the issuer in the middle, Vanagas Asset Management, and main highlights about it, as I mentioned, is it's our internal, let's say, investment holding company, and what it does, right? That the main thing is we see that it focuses on the investments in selected, in the clearly defined, and relatively low risk opportunities. So what I mean by that is mainly real estate projects with building permits. We discussed a bit what's the geography. So mainly Vilnius, quite attractive locations in Vilnius, as well to some extent Kaunas and other Lithuanian cities, which we will touch. So that's about the issuer, but I think it's important to a bit touch the sister holding companies, so Citus Group and Vanagas Invest. So firstly, about Citus Group. So in its essence, what does it do? So it was, as mentioned before, established more than 10 years ago, and basically it provides various different services to the real estate developers. So projects which are developed under Vanagas Asset Management, and this is full spectrum. So construction management, sales management, market analysis, and all basically other related services to the real estate development. And regarding Citus, maybe worth to mention that it's really well-known brand in Lithuania. As we discussed, top three by sales here in Lithuania, and more than 10 years of experience. So we believe that this long-term experience and market knowledge and ability to consolidate the services that they provide to different projects allows for us to believe that their, let's say, price to quality ratio is really high. So that's why our projects where we invest buy those services from Citus Group. So this is the relationship between the issuer and one of the sister companies, right? And just to mention briefly, Vanagas Invest, basically, I mentioned before that we have some other cash flow positive businesses on the side. So it's under this alternative investment holding Vanagas Invest. And there's various different businesses. There's quite a lot of real estate as well. So with a bit higher uncertainty, where maybe building permits are not ready yet. So we are basically working on those business permits as it is in the sister company, not in the issuer, to basically lower the risk to our potential investors. And there are some, at least in Lithuania, a bit more known businesses here in this subholding. So one would be Demus Asset Management, which we touched a little bit, being the funds management company. We're also historically made quite substantial investment and own quite substantial part of Profitus crowdfunding, which also operates as a crowdfunding platform in Latvia and Estonia. And then we have a ventilation system provider and creator, Oxygen Group, which also sells Pan Baltic and abroad. So about the issuer, once again, Vanagas Asset Management mentioned that it's relatively low risk opportunities in our evaluation. And key numbers regarding our wider group before even Vanagas Asset Management creation. So Mindaugas Vanagas since 2013 companies has developed more than 180,000 square meters of residential, mainly residential building space. and it is more than 3,000 apartments that are already sold to our clients over last decade. And in total, it's 25 projects already. So we mentioned that majority of it's historically been in Vilnius, some in second largest city, Kaunas as well. But I think it's also important to mention that we're doing one project in Druskininkai, which is a resort city in Lithuania. So we will expand on that a little bit, and also in Nida, which is a prime resort city in Orion Split by the sea. So regarding the future, so we touched a little bit planned acquisitions, right? But there are some projects which we already have acquired. We're currently getting the building permits. We're making preparation works, and we're planning to launch those projects in the near future, which is in 2025 or 2026, and it's in total more than 10 projects. So moving on, regarding a little bit more details on what we're doing, right? So we touched a little bit already Mūnai, we touched Kaip Niujorke, we touched Ežero takais. So I will not repeat myself, saving some time. You can read more details or ask additional questions online or offline if you want. But maybe to mention this a little bit project Nemunas, which is in Druskininkai, which I just mentioned. So it's basically all the sanatorium conversion. So historically, there was this sanatorium some years ago, and we're doing its conversion now to this apart hotel concept. So we're selling more than 200 units in total. And the first phase is with 180 apartments is basically nearing its completion, as majority of the apartments in the first phase has already been sold. And the second phase is already beginning, I would say, in a few weeks or even or a month. And continuing to other projects which we are currently doing or planning. So Senamiesčio link also a bit mentioned. This Panerių Street 49 is the project which we mentioned under planned acquisitions. We just basically closed the acquisition process. We acquired this land plot where we plan to start construction of more than 250 flats and apartments and some commercial premises as well. And touching a bit on other cities than Vilnius, so we have in Kaunas, you can see Radio City. So there was first phase which was being developed some years ago and is already done. So we are launching this month actually second phase. So it's almost 250 in total apartments and commercial premises. So it will, as mentioned, start very soon. And similar story to Nidos Bangos. It's a Nida city, as mentioned. The Bangos means waves, so Nida waves, right? And there are two phases there. So first phase is developed under related company Vanagas Invest, which I mentioned before. And phase two, where we are also investing in, construction will start soon this year as well. So for those who are not very familiar with Vilnius, we show a bit. I mentioned that it's quite close to the city center, so we just show visually where it is. Regarding the planned acquisitions, it's also, as mentioned in Karoliniškės, in Lazdynai, you can see a bit on the left, it's quite nearby the city center. Regarding other cities, also Kaunas here mentioned, so it's in Žaliakalnis district, also quite prime location, very close to the old town, which you can see a bit below this mentioned Žaliakalnis Druskininkai city center, and Nida just by the Marios, which is obviously lagoon, yeah, in Orion Split, maybe that's the main thing, so by the water as well. Some examples of what we have done historically. I mentioned that total project count which we developed is more than 20, but some examples. So this Karaliaučiaus slėnis, Karaliaučiaus Valley. So in 2014 to 2019, we did 10 phases there, 750 apartments, and at that time it was recognized as best residential estate in Lithuania. Then some presence in Kaunas shown here as well. So regarding the structure, quite a lot of information, right? So I want to point out and stress out some main things. So I think to begin with, it's important to understand that basically it's the market, it's market practice to have basically every single project in a different company, and the company could be regular SPV company, we call in Lithuania UAB, in Latvia SIA, right? Or investment fund. So I would divide all the companies that you see here where we invested and our investments range from 30% to 100%. We own some of the companies, but typically it's over 50%. But important here to mention, I would say maybe like three buckets or three categories of all these companies. So first one is companies which are currently being under development. Here we also mark this darker color Collateral. So the aforementioned projects, right? Victory Development 4, Victory Development 5. So it's Mūnai, Cape New York. So other companies, so which other projects which we discussed are also in this, let's say, bucket, which are currently being developed projects. Second bucket, I would say, is projects which are nearing its end. So a few examples maybe here. There is this so-called investment fund Celius, which are finalizing basically its activities, selling out final units before the fund closure. And similar story are with some other companies as Vilnius Nord, Radio Parkas. So maybe I will not go to too many details. The idea here is to basically close those companies or in the future or leave them for future developments. And regarding those so-called future developments, we have some companies prepared for future acquisitions as well, which we already discussed. So that's this, let's say, third bucket. So moving on, a little bit, I wanted also to mention on the key management. So Mykantas already mentioned that it has quite substantial experience. So a bit expanding here. So regarding founder or sole shareholder Mindaugas Vanagas, I will maybe not go into too many details, but maybe we'll just mention that he is also active in Lithuanian Real Estate Development Association and board member there for already 5 years. So regarding myself, Mykolas, right? So I have extensive experience in finance mainly, but also leading companies, working in holding company, as I was in Maxima Group, a holding parent company for many years. So that's my background very quickly. And regarding other key personnel, so you can see Šarūnas, Vilius, and Laura. So basically, main important points I would say like this is that they spend their entire careers in real estate or areas directly related to real estate. So basically, financing acquisitions, planning acquisitions, selling some projects, developing projects. So basically, real estate investments, finance is the bread and butter of our key management. So that's the most important thing. And Šarūnas is head of investments at Citus and also CEO of some of our Vanagas Asset Management companies. And the funds itself where we invest are managed mainly by these two people, Vilius and Laura. So also they're, as mentioned, real estate experts, many years in real estate, and also what is, we believe, very important, many years in our group as well. these people. So that's a brief summary on the key management.
Yeah, thank you, Mikos.
Yeah, so going further to the financial information, looking at the consolidated financial statement, as it was mentioned before in the presentation, the issuer is a investment holding company and it does not fully control the funds and the project SPVs. So the equity method was used in the accounting of these investments. So the results from the revaluations, the partial sales of the projects could be seen in other interest and similar income rather than sales revenue. Yes, going further to the balance sheet of the issuer, looking at the assets. As Mykolas mentioned before, the UAB Victor SPV owns the apartments that are used for rent, and it could be found in the investment property line. Then going further to the financial assets, this is where all the investments through equity injections could be seen to the subsidiary companies that develop real estate, and just going further to the amounts due from associated undertakings. The issuer has lent some funds to the parent company UAB Vanagas Group. The loan itself at the end of the year was 4.1 million euros, but today the sum itself has grown a little bit to 5.7 million euros. And additionally, the issuer has provided funds to subsidiary companies as just short-term loans. Then looking to equity and liabilities, as Mykantas has mentioned before, the company has a rather strong equity position of more than 31 million euros. Therefore, the equity ratio of the company is at 87%. The financial liability side, the bank loan to Victor SPV1 could be found that due to credit institutions, and obviously the debt liabilities consist of loans from shareholders and associated companies. But just to mention, at the current time, a lot of these debts were repaid.
Yeah, it's a brief summary of financials. Moving on to the risk factors, of course, it's not pointed out at full extent, but we urge all the investors to review them in the information memorandum, which is available online. So information document, of course, talking about the general business risk factors. Well, it's all the risk factors related basically to real estate. So of course, market trends, where the market is going, real estate is affected by the interest rate environment and so on. I think I see we have a question about where the market is moving, so we will comment on that. So basically, all the usual real estate related risk factors. Regarding group specific, of course, it's a holding company. It's issuer is a holding company. It is not directly owning the real estate which is being developed, but owning subsidiaries, SPVs, which are developing the project. So the value has to be lifted to the holding level, which is done usually by the way of dividends. So, but still, it could be viewed as posing a potential risk. Regarding the bonds, it's well, nothing new. Of course, liquidity, interest rate fluctuation, inflation risk, which would in terms could change the value of the bonds, since the bonds will be listed on First North Stock Exchange. We have a deadline of 6 months, but I think it's going to be sooner, max several months from the issue date. Of course, liquidity in the secondary market is not guaranteed. It can fluctuate, and if investors are willing to sell the bonds before maturity, of course, they can price could be lower than expected. And yeah, finally, legal factors also, of course, litigation risk, compliance risk, but nothing too specific, I would say, for this issue, or nothing different from usual real estate development related legal factors. So before moving to the Q&A, we have quite a few questions I see. Finalizing once again on the term sheet slide. As I mentioned, total program up to 8 million euros, but first tranche is 3 million euros. Placement and subscription period is till the next Wednesday, 16th of April. Settlement and issue date 18th of April. Interest rate is going to be determined by the auction process. It will be finalized at 8.5%, or 9%. Paid out semi-annual with maturity 2.5 years. Minimum investment is since it's public offering is one bond, so 1,000 euros. Maximum, of course, is the whole issue, and subscription could be done in a usual way through Nasdaq auction system. So investors simply have to have account opened at the bank or investment company, brokerage company in the Baltics, so Estonia, Latvia, Lithuania, and which has access to Nasdaq. So I guess all the LHV, Signet, Swedbank, SEB, they are participants, and you can submit orders through that system. Regarding security, pledge of subsidiary company shares, which are evaluated based on a real estate appraisal once a year, and covenant is set that the value has to be at least twice the size, so LTV up to 0.5. Also, additional security control is included using adjusted capital ratio, which is set that it cannot be lower than 30%. Now it's well above 50-70%, I guess, adjusted one. So, and yeah, early redemption call is a possibility. It's not a plan A, but yeah, the company has an option, has a possibility to execute early redemption call after 12 months earliest, paying additional premium if it's still 2 years of maturity. So that's a short overview, and I guess yeah, we can move on to the questions. Maybe start a bit with general ones about the market.
Yeah.
How is the residential real estate market in Vilnius looks like today from Mykola's perspective in comparison to 24 and 23? So maybe
Okay.
prices, liquidity, movements.
Okay. So thank you for the question. Maybe I'll just remind before deep diving that both in 2023, 2024, we were top three developer in Lithuania. And maybe first on Vilnius a bit, and then on Kaunas, right? So what we track and what basically whole market here in Vilnius tracks is the sales count of newly constructed residential housing, right? So we track it by units per month. So to give some context, in 2023, let's say average sales count per month in the whole market, right, was around 230 per month. Then what we saw in 2024, the market really started little by little, basically to increase its sales. And what we see that in the second half of 2024, this average per month of sales reached, say, 350, maybe 370. And regarding 2025, first quarter, I would say it's like really, really good. So the average, it's close to 600 units. So again, reminding 2023 around 230, 2024 350, 370 towards second half of the year. We started this year with almost 600 in the monthly average in first quarter. Then, of course, we were discussing with Mykantas and Matas before the call. So how is it due to this market turbulence a bit, right? Is it impacting the real estate market or not? So For last week, I just received from the colleagues some information in Vilnius market last week. Nothing really extraordinary. Sales continue as planned. So people really are planning those purchases of real estate for quite long time. And we see that the market structure remains really positive for 2025. Continuous decrease of Euribor will really help, and overall Lithuanian, as most of you probably know, Lithuanian economy really remains resilient. So regarding the prices, maybe, yeah. So the prices, I would say 2023, 2024 were more or less stable. There were some fluctuations, some months increasing, some months not increasing, remaining stable. But it's important again to look at the first quarter, in my opinion, of 2025, since the unit that were sold increased really significantly, and at the same time prices as well increased. So prices in Vilnius increased year on year by around 5%, now even increasing a little bit even more we see last few weeks. And in Kaunas, it's around 10% year over year and also continues to increase. So both sales and prices continue to increase. And we see that we were actually anticipating very similar movements. We see it as market dynamics, and we believe that 2025, 2026 will be similar to what we saw, really high increases of sales during 2021.
Maybe just to bring in context, what is the average price of your flats per square meter in Vilnius, let's say?
I would say it's around 3,300, something like that. So in, of course, a little bit more prime location stores, the city center, it could be even higher, up to 4,000 units. And in premium segment in Vilnius overall, it can, go to 5, 6, 7,000 per square meter. So market dynamics are really there.
Okay, thank you. Question regarding your experience in the bond market. Is it the first time the group publicly issues the bonds? If not, did the group have any problems redeeming previous bonds? So,
on the group level, it's the first time. So basically, my experience and I joined the company 1.5 years ago. So it's the idea that at that time we started to structure our holding company. You saw in the structure that Vanagas Group, let's say, was operating for many years, but it was operating more from legal standpoint, not from managerial, let's say, standpoint. So we established the holding company with me joining the company basically 1.5 years ago almost, and that's when we made a decision basically to issue bonds on the group level. But it's important to understand that we have historically issued bonds on some of the SPVs and the funds. So Mooney, which we discussed a little bit, Victory Development 4, has issued bonds, and it's of course still ongoing. We haven't repaid them yet since the project is still in construction.
Yeah, thank you. We have several questions about the fund structure, which seems a specific thing about your group that you're using these closed-end funds.
Yeah.
Can you explain what is the reason of structuring development companies and investment funds and not as ordinary limited liability companies?
Yeah, so thank you for your question. I would say there are two main factors. And they're both, I would say, a little bit interconnected. Again, that's my opinion, but I'm just providing it. So some years ago, Lithuanian bank decided to basically expand capital markets in Lithuania. So they gave, how to say, incentives to the market players to actually work on this fund structure. And what was the incentive? Is that these closed-end funds do not have taxes on them, profit taxes. So basically, That's the main part why we want to develop our projects via those funds. And additional thing is that since, as I mentioned, Lithuanian bank really wanted to expand the capital markets, we were also able to, let's say, use this possibility to attract outside capital as equity investors into those funds. So when we look at our structure, you can see that our ownership and our investments to those funds fluctuate from 30 in funds to almost 100%. So the remaining part are basically invested by outside investors here, mainly in Lithuania.
It's a related question also. Who are the equity investor in free funds, starting free funds which are pledged? Any color on their background would be helpful. So is it high net worth? Is it other corporate groups?
Yeah, mainly it's mainly high net worths here in Lithuania, people who have exited their businesses and now or still have ongoing businesses and they want to invest their capital as equity investors to such projects as ours. There are some institutional, but I would say the larger part are high net worths.
Okay. And also another related question. For the projects, fund units that are pledged, under what circumstances would you need additional equity funding in these projects, or is it fully funded from equity perspective?
You mean, is it already formed, the equity, right?
Yes, and is all the equity which is needed for the project completion, is it in place, or are you planning to inject additional?
So Mūnai and Cape New York, so Victory Development 4 and Victory Development 5. Yeah, we can go to the slide of the collateral. Yeah, so two from the left, right, Mūnai and Cape New York, it's done. No more equity injections with Cape New York. It's more like ending. The project is nearing its end, even, let's say, and in 2025 we're planning to sell out the majority of the units as mentioned. So it's almost done. Regarding Mūnai, also there are different phases, so dividend payments will be done a bit later than in Cape New York, but again, equity is done. Regarding Demus Development 6, yes, so we will probably be making some additional equity investments both from ourselves and both from outside investors. So this percentage owned by the issuer will decrease a little bit. But again, as we state in our information document, it will remain above 50%.
Okay, yeah, thank you. Intergroup transactions. So I guess it was covered, but maybe we can repeat.
Yeah.
Who does the construction works for the projects? Is it related party, part of Vanagas Group, and how exposed are the fund equity and bond investors to construction cost overruns?
Mm-hmm. Yeah, so two questions there. Thank you. So answering the first one, there is this company under Citus Group, so-called Citus Construction. So it does not have, let's say, their own construction workers. It works more as a consolidator of construction works, consolidating the needed construction works, purchasing from different projects which we are developing, and then they are doing конкурсы.
Tender.
Yeah, then thank you, Mikant. Then they're doing tenders to purchase the best possible prices from the companies, which are then making the actual construction. But what's important here, I think, to mention is that we have our own construction supervisors in every object overlooking those, let's say, workers who are doing the factual work. So that's answering first part of the question, and the other one is balancing the budgets, right? Potential overruns of the budgets. So what we are doing, I would say, two types of buffering. So first type of buffering is when we're planning the construction budgets, they are planned by Citus construction managers, but they're also double-checked typically, at least for the largest projects, by outside construction, how to say, price potential auditors. So we not maybe audit is the bad word, but just checking the prices with third parties as well. So that's just before the construction. But then once the construction starts, we're making additional buffers on the price, and while we're calculating the potential returns to our capital and to outside investors' capital, there are some additional buffers, and we see that we're basically able to navigate those budgets quite successfully, and mainly due to this long-term experience by Citus Construction.
Yeah, thank you. Regarding several questions regarding your strategy.
Yeah.
So do you intend to expand beyond Lithuania in the future, or are you gonna focus on as a domestic developer?
I would say like that. So there were some calculations trying to go to Riga, trying to go to Poland, even Tallinn was under discussions for more than 5 years. But opportunity cost, let's say, was always better in Lithuania. So that's the main reason why we decided to develop and invest our capital here in Lithuania, purely due to the fact that we always calculated that the returns are better here. So that's about the history. About the future, we're continuing to evaluate those opportunities. If some like really good business cases arise, we'll do it. But is it like a given? I would say it's more like a low probability due to the history, which I mentioned in the previous bullet point. So if we'll do it, it will be like one project out of 10 or more, and the probability for us to do it for upcoming 1 or 2 years, I would say it's pretty low.
Okay, thank you. Do you plan to keep certain amount of finished projects as rental property since you have a portfolio of flats, or
Yeah.
is everything gonna be sold?
Regarding the projects which you saw, which we are currently developing, we do not have such strategy that we keep some of the apartments for ourselves to rent. We sell everything, but we have a company, actually two companies, one under the issuer, one on the side, where we have multiple flats that are being rented, but they are bought from other developers, not from ourselves. We decide not to do it.
Okay. Yeah, technical question, which I can answer. How is the market value determined for the collateral? So as mentioned in the slides, first we start with outside independent certified real estate appraiser, which determines value of real estate owned
Yep.
by the SPVs. When you subtract the debt of these SPVs and arrive at equity value, which is then checked by the financial accountants, management company, and finally by the audit. But
Yep.
And yeah, since these investment companies, we have to do net asset value calculation once a year. That's why we say that it's being checked on a 12-month basis for valuation, is to renew valuation at least every 12 months. So making sure that market price of real estate is reflected in that LTV.
And maybe I will just add on that it's like the maximum term once a year. In some cases, we're doing it more often, semi-annual and etc.
Yeah, could you specify exact use of the bond proceeds? So I guess we mentioned investment projects. Anything, is it possible to make more exact?
Yeah, so maybe we can go to the use of funds slide, right? So thank you for your question. So as I mentioned, there are two pillars of the use of funds. So the main pillar is to basically invest into planned projects. So you can see the list of 7 projects I mentioned, but I will repeat quickly that This Panerių Street 49 already done. So the additional capital part of it will go there. Then there's another project where we already made an advance payment in Naujamiestis. And then there's another 5 projects you can see in the table below. So basically, I would say that almost all capital will go there. But as I mentioned also that since this acquisition due diligence takes some time, we still want to, let's say, keep the ability not to lock our capital and to keep it working by using short-term relending to other current working project companies if needed. So, but it remains smaller focus of ours.
Okay, thank you. And yeah, the question with quite a number of sub-questions.
Yeah.
But very good ones, I would say. What is the consolidated LTV, including the loans in SPV? So what I have mentioned, maybe worth repeating.
Yeah. So as mentioned, now our equity ratio is close to 90%. But if we amount basically all other funds, let's say below the issuer, below Vanagas Asset Management and all their debts, and of course their assets, we see that equity ratio decreases a little bit, I would say to something like 55 maybe percent, something like that. But what's important here to stress out that it still remains quite substantially over the market average, which we see, which typically is closer to 30 to 40%. Again, we see ours is 55 or even more.
So LTV is 0.45.
Yeah. From our side, yeah.
What is interest? What interest is there on the loans granted to shareholders, which are provided as collateral?
Yeah, it is a market interest rate. What is market interest rate? It is specified by a Lithuanian bank. So actually, I checked yesterday since the quarter ended, and we do it on a quarterly basis. So it was 4.91, so almost 5%. Again, stated by a Lithuanian bank, we account to that.
Yeah. Okay. What is the current pre-sales rate on the total portfolio? So I guess the average one.
It's hard to say. Maybe we can go to the one slide back, redemption, right? Yeah, you was yeah, here. You can see percentages of apartments sold, but what is the idea? Maybe how we calculate. Our idea is to basically sell majority of the units, target is 85 to 90% of all residential units until the construction is finalized. So basically, we start construction, we start sales. Once construction is done, target is to have 85% of all the apartments there sold. So what is happening, how we basically manage it is by pricing levels. And another thing is that we manage it by, if it's a big project like Muni, where our 5 phases, we do it in phases. So, it's hard to say that in Muni we have, 500 flats in total. So first 2 phases is 200, you can see. So in those 2 phases now 44 are sold. But again, I want to deconstruct this a little bit to understand the logic of our business is that we started with phase one. I mentioned in the presentation, it was going better than expected. Basically, it was selling faster than we anticipated. We were really happy about it. So what we did, once first phase reached like 80, those close to 85%, we initiated the construction of second phase, and then we initiated the sales of second phase. So it's hard to look like that and put everything into one basket due to the fact that we limit it by phases. So main idea here is that let's do it by phase. Once it reaches close to 80%, we launch second phase. We did it with Muni, we did it with Cape New York. And yeah, some context. So to summarize, I would say like that. Current sales in all projects are above 50%. Due to this our logic, and it depends, the exact number depends on in which phase is the construction. Senamiesčio link started not so long ago, so 40% only sold. Ežero takais started a year ago, so you can see we're planning to finish construction Q3 this year. So apartments sold, as I mentioned, already nearing this 80%.
Okay, yeah, thank you. And finally, how is it decided which projects will be developed by Vanagas Invest and which by the issuer? And maybe, yeah, so repeating once more about risk levels.
Yeah. So I would say the development itself, if it's Vilnius, if it's Kaunas or other prime location as a residential city, not residential, but holiday cities as Nida, right? Once we have the building permit, it's done in Vanagas Asset Management. If it's something, that there could be some unexpected delays due to getting the permit, or there could be some issues with municipality, then we keep it in Vanagas Invest, but it's like 1 out of 15 to understand. What Vanagas Invest purpose is here, basically, once we acquire the project where there is no building permit, we do not want to put it in Vanagas Asset Management, the issuer, and increase the risk, but because there is potential risk that you could not get the building permit. It has not happened yet that the municipality said, no, you won't get the building permit here, but there is a risk. So we don't want to put this risk into this lower risk investment holding. So we manage this risk in Vanagas Invest. Once we get the permit, or it's very clear that we'll get it in like a few months, it goes to Vanagas Asset Management. So main logic is like that.
Okay, so it's temporarily parked.
Yeah, it's temporarily parked. Yeah, it's temporarily parked, or maybe just to mention that there are some let's say, additional developments in other Lithuanian areas, but we believe it's a bit higher risk. So again, we do it in Vanagas Invest.
Okay, so thank you. It was last question.
Yep.
Very deep one, very good one. So thank you for these questions. Thank you, Mykolas, for answering it. And once again, as mentioned, we have issue subscription going till the 16th of April. So we encourage all investor to analyze thoroughly. If you have any additional questions, just drop an email to Orion Securities. Our contacts are available in the presentation. We can also arrange additional calls with Mykolas if needed.
Yeah.
But anyways, we urge you to analyze it and make a decision. As I said, subscription is through any investment bank which is part of NASDAQ system. So LHV, SEB, Swedbank, Signet. You can submit subscription orders through any of these institutions, and we encourage you doing so. So thank you once more for your time, and have a nice day.
Thank you.
Bye.
Bye-bye.